Thank you. Good morning. How are we all today? Doing good? Yeah? All right, so I'll be giving a talk about trustless financial systems at scale. This is going to be a very high-level overview. So I'll give a basic introduction to what is blockchain, what is consensus, and then, just some basic applications. So we're really not going to go into too much technical details. It's just really going to be more about what can we really do with this technology stack and how we can, go ahead and apply this in the financial systems.
Is this? Oh yeah, I gotta hold it closer.
Is there a clicker or? Okay. There we go. All right. So, what is blockchain? Well, really, it's a log of the transactions. You have this database, and you're trying to go ahead and come to some type of agreement as to what are the transactions that cause a state change to your database. So I have an initial state, and I'm going to go ahead and update the state, and I need to have some type of approval, right, from either some type of role control access or some other mechanism that says that this is a valid update. So what do? We store all these transactions in a block, we go ahead and aggregate them all together, and then we append it to the blockchain, and we link each block, one after the other. Okay, so this is really fundamentally, this is a classical problem known as consensus. This has been going on now for the last 30 or 40 years. This is not anything new. Anybody who wants to tell you that this is really innovative, yes, it's innovative. There's certain aspects that are innovative, and really what that is the permissionless aspect, but in the classical permission setting where we know all of the nodes, we know all the identities of everybody, this is very, very, well known, well studied, and we have lots of really solid understanding from a security model of what's really going on. So what are some of our basic properties of the blockchain? Well, we can either have a permissioned or a permissionless system. So a permission system, as I said, is where we already know all the validators ahead of time. So we have some type of central authority, maybe we have some consortium, and all the players who are participating in this network are all identified, they all have equal rights, and now they can go ahead and try to come to a common agreement, even though they may be mutually distrustworthy of one another. Now, the other aspect that we have that we've seen in sort of the Nakamoto protocol is this permissionless setting, right? So what does this mean? We are saying that anybody is able to join this network and anybody can leave at any given time. So it's fully voluntary. There's no way of, no central authority of saying, hey, look, I'm going to pre-approve Saudi over here, and only his friends are going to be allowed to come on board and to participate in this network. No, we're going to allow this to be very open. We want to be inviting. We want to allow for any arbitrary participation. So the next property is trustless. So if we have multiple parties that have competing agendas, right? They may be different companies. They may not know one another. And so what are we trying to do? We want to create some type of game theoretic incentives or any type of disincentives to make it so that they operate in a way that is going to follow the protocol in an honest, they're going to follow the protocol honestly. So, we say that these people are operating in this trustless environment. Now, for the most part, if we're operating in a business, in an enterprise, if we're not trusting our business partners, things are, sort of done anyway. But, we can actually go ahead and model this in a more abstract setting and say, hey, look, we don't necessarily need to know if we actually trust, one another. We can still do business, still transact, still, have value transfer. And then the fourth property is immutability. So this is neither here nor there, but I'd say we have this property of immutability in the sense that we know that once you have a transaction that's committed, as long as everybody continues to stay honest in this network, then you're guaranteed that you have a record of all the transactions. and that this record isn't going to get backdated or reorganized or anything along these lines. And then we also have public key infrastructure. So what is public key infrastructure? This is something that we've had for the last 20 or 30 years, maybe longer. And it's really just saying, hey, look, you know, I'm Matt here. I only have particular actions that I'm allowed to perform as far as what I can do when I'm interacting with this network. So maybe I can only go ahead and do a couple of things, but I can't do these other things, right? So I can do maybe some basic value transfer, but I have a restriction on the total amount that I can do per day. And then finally, I think a really key point here is that this is all public and it's transparent. So we have these public ledgers, and maybe, you know, we can go ahead and have some mechanisms for hiding some type of data, but these, you know, we have public APIs, we have the ability of accessing this data, and it's fully transparent and auditable. So all of this, at the end of the day, leads to decentralization. So decentralization, at least in the permissionless setting, is really saying that we can have as many parties that are participating on these networks, and you know, the more people, the merrier, right? That's what we're trying to get at. So how do we really get there? Well, we need to really understand what are all the key pieces of this technology stack that we're putting together into creating this blockchain technology. So I talked about permission versus permissionless. This is really, at the end of the day, how do you achieve permissionless? If you have a permission setup, what you want to be able to do is take these classical algorithms and add some type of anti-Sybil mechanism. So Sybil is your attacker, and she's able to go ahead and create identities for free, okay? And if she's able to create identities for free, then that means she can take control over the network. So if she has a mechanism to have more than 1/3 of the network in the classical setting, then we have a problem, and there can be some type of either we can't come to an agreement as to what are the valid transactions at this point. So this is a problem. So what we do is we create some type of economic disincentive, some type of barrier to entry to be a participator for this validator set. In the case of the Nakamoto protocol, with the origination of proof of work with Bitcoin, we had you know, proof of work which said, hey, look, we have to have some type of computational power. This computational power is our barrier to entry, and it's just a means of saying that you have to prove that you have some type of skin in the game to participate in these networks. So really, with these trustless systems, what do we want to say? You don't necessarily need to know all of the details. If you can trust the math or trust the science, well, then we're good to go. And that's what we really try to do, at least with the project that we work on with Aleph 0, is we want to formalize all the mathematics, all the provable security, so that you don't have to worry about these issues. So, you know, if you're operating and you want to go ahead and adopt the Ethereum technology stack, or you want to adopt, you know, some type of Nakamoto protocol, well, these are very new. We don't really have a very solid understanding of the underlying security models, but if instead we go ahead and use the classical settings, we can take that entire history of 30 or 40 years and use it now in our new system. And so we want to actually be able to achieve scalability. So what's this mean is that as we increase the users on our network, we want to be able to handle this transaction load. So, you know, it doesn't really do any good if you're looking and considering, say, the Ethereum network, and for whatever reason, if you're trading these little cats, that it's going to end up bogging down your entire network. This is really not scalable. This is going to cause a bottleneck, and what we want to be able to do is say, hey, look, regardless of how these people are operating and interacting with this public API, this public network, we're able to handle this transaction load. In addition, you want to be able to say that you can scale with the number of users that are participating. So not just the people who are putting transactions on the network, you also want to be able to say, hey, look, the amount of communication steps that we're taking whenever we're adding new nodes, this is not going to bog us down. We can actually go ahead and reach consensus very quickly. And then there's a couple of other techniques you can do. You can use these things called state channels. This is off-chain layer 2 scaling. This is essentially what Lightning is operating on. And there's some really nice techniques that go with this. It has their own problems, but it allows for some additional scaling that can be done off-chain. So now you don't necessarily have to have all the transactions being recorded on the blockchain itself. You can do some of this stuff off-chain, do a whole bunch of these transactions, and then aggregate them as a single state update and say, hey, look, here's my new update that I want to apply, and go ahead and record that in the history of your transaction records. Okay, so public key infrastructure. This is actually a very, very key component when it comes to these blockchain technologies. And what do I mean by this? So in financial systems, if I am going to go ahead and try to, maybe I have some Bitcoin and I want to go ahead and take it out and take it into fiat, then potentially I'm restricted on the number of transactions that I could do, or the value amount that I could perform. Unless I'm KYC. So if I'm fully KYC'd with an OTC desk, what does that mean? That means that they can identify me using this public key infrastructure to say that I have the particular access and control to be able to do more transactions than the average person who may not be KYC. Okay. And this extends just beyond that. So it's initially started out, if you consider your Unix systems, just read, write, execute, right? So read, write, execute is a basic understanding of how public key infrastructure operates. Each of the users have their own public key, right? And now we can control what kind of read, write, and execution that they have for particular files or directories, okay? And it goes beyond that. So now if we're talking about, well, if I'm dealing with stocks or other securities, maybe I need to be approved as an accredited investor. Maybe I need to be able to say that I have the ability of issuing bonds, issuing stocks, and I have to have that kind of role control sort of provided to me by some centralized authority that says that I have the ability to do these types of things. So there's a whole slew of applications whenever it comes to using the blockchain for financial systems. And I'll just give this brief overview, but what I'll do is actually go ahead and talk about, I think 3 or 4 of these to give you a little idea and go into a bit more detail. Okay, so digital national currencies. Now, I know that I read an article about, maybe 2 weeks ago where some official from Korea said that there is really no way that they're ever going to consider using a digital national currency in Korea, at least from the central bank's perspective. Now, that's wonderful, that's great, we can all say these types of things, but are we really understanding what are the efficiencies that we're able to gain? And I think that the real primary thing that we need to consider is that there's no availability for anybody to be counterfeiting, right? So we eliminate this entire division of law enforcement to try to figure out if people are counterfeiting these, our paper currency. That means that all of those resources can be redirected to really go after, other, more violent crime. We can do transparent supply. So if we're talking about, well, what is the actual supply of the currency of the central bank? Well, this can be actually available and made public, right? We can have transparent expenditures by the government, right? So how are they actually using our tax dollars in such a way where we know where this money is going? This is very powerful, right? This really gives power to people. We can do automated tax collection for certain transactions. So using the public key infrastructure, you can have a merchant that says, all right, well, maybe I have to go ahead and pay a sales tax, right? So if I'm already identified as a merchant, I have this ID on my, using the public key infrastructure, I can automate fully tax collection at the source. And so now there's no need to go ahead and do quarterly payments, to do, yearly payments at the, for your sales tax. This can be like that instant. Okay, so stocks. This is, obviously a very simple application. As far as securities are concerned, it's a $70 trillion market globally. We can actually have ownership recorded and updated on the ledger itself. And, with all this, using the public key infrastructure, we can restrict the transfer of the ownership as well, right? So we can whitelist people who have the ability of actually purchasing certain types of stocks, maybe in the private equity markets, right, where there's various restrictions with respect to securities. You can have reports be made available to your shareholders, right? So if there are, requirements to do quarterly updates, you could just actually use the blockchain as a communication layer to provide access to those quarterly updates specifically to those shareholders. So now you don't have to go ahead and mail the documents and the records to them. You can have it fully available, it's all public, and it's easily accessible. You can have companies can raise capital now. They could issue their own securities, their own bonds. They could do convertible note options. They could do all sorts of things. And this can be done directly on the blockchain once they're given the proper authority to do so. So insurance, this is another great example. You can do streaming payments, right? If you're actually in a car, what are you able to do? You can say, all right, well, maybe I don't drive that much, but whenever I'm going out to go see grandma down in Busan, I want to actually drive my vehicle, and well, okay, great. We can go ahead and do an automatic payment based on the kilometer usage that you're actually driving. You can take out loans against your life insurance policy. This is a standard technique. If you're doing whole life insurance, you can actually go ahead and automate, taking out these loans, and you can record this and make it really, keep track of it fairly well. You can do automatic payments of various types of claims, car insurance and accidents. You're talking about home insurance in the case of like a tree falling on your roof or on your garage. You can do death benefits, that should be benefits. So all of these things, they do require some additional infrastructure from the national government as far as your identity is concerned, and being able to say, hey, look, we actually have a death certificate. We can record this on the blockchain. If it's been fully approved, then we can just automate the death benefits to the particular people that are actually the beneficiaries. All right, so this is actually a really nice one. We can go ahead and create our own carbon credit exchange. So we all understand that what happened with the Kyoto Protocol was that we had these brokers that were going ahead and issuing carbon credits that they didn't really have. Everything was fully paper, right? Nothing was digitized, and these people were lying whenever they were saying that they were going to make a sale of some carbon credit to somebody else. So what does that really mean? Well, we can actually programmatically consume or destroy a carbon credit that is needed for a nation's nationally determined contribution, right? So these indices. And then also the companies themselves can prove that they actually use the carbon credit themselves to offset the taxes if these are being done at a national level to sort of provide some disincentive for the carbon polluters. So this can be all fully transparent, fully automatic, and we are able to do something that really, failed in the last time we tried this with the Kyoto Protocol. And then finally, another very basic application is the use of dark pools. So dark pools are where you're doing large trading blocks of stocks, securities, bonds, whatever it is that you're trading, but you're doing so in such a way where you don't want to put out information into the market that's going to cause particular actions to occur, right? So you don't want to make it so that, hey, look, I'm going to sell 100 million, shares of Walmart, and that's going to cause a movement in the stock price. That may be not a good idea to actually do. Maybe there's somebody who wants to purchase 10 million shares of Samsung. You don't necessarily want to make that fully public. Now, you may have to do so at some point later in the future, but there's a time delay that you're allowed to have before you're required to go ahead and make that kind of information public. And what this does, it allows for the markets to not necessarily react to these large trading events that can occur. So at least in the States, it's about 40% of all stocks are done over the counter. In Europe, it's around 20%, and this is still growing. This is a very nice market that has quite some advancements that are happening. And so that is all. I will just give a little brief overview of what the Aleph Zero Foundation is, since I just have some time. So Aleph Zero is a Swiss foundation. We are developing a new platform similar to Ethereum or Cosmos or Tezos, any one of these. We have a brand new consensus algorithm. We have this was peer reviewed with the Advances in Financial Technology. This was done with the Association for Computing Machinery, the ACM. So as far as our consensus protocol is concerned, it is really honestly the state of the art relative to what's been done before. And I'd be happy to answer questions. I can talk to you about this afterwards, and I'll field any other questions from the audience now.
저희 닥터 니르맥 박사님에게 더 뜨거운 박수 부탁드립니다.